right, everyone. Welcome to today's webinar, How to Trade Like the Pros. My name is Jerry D'Ambrosio. Happy to be with you folks here today. Before I get started, just want to do a quick sound check, audio check, video check, just to make sure everybody can see my screen. You can also see me on the left-hand side of your screen, I believe, if you are joining us via GoToMeeting. And then, of course, the sound is coming through okay for everybody. So if you guys don't mind, those of you joining us via GoToMeeting, we have two groups today. Those joining us via GoToMeeting and those joining us via YouTube. So welcome, everybody. Glad you guys could be here today. Again, those of you joining us via GoToWebinar, just type in something to let me know that you can hear me and see my screen okay. We are working with the webcam today, so I just want to make sure you guys can see me over on the left-hand side. There we go. Tom says both good. Joe says great. Antonio says okay. Sound is good. Hi there. Can see you. Awesome. Well, welcome, everybody. My name is Jerry D'Ambrosio. I'm the manager of educational content here with VectorVest. Been with VectorVest now 16 years, let me think. In a couple of months, 16 years in June or July it'll be for me, and it's been just fantastic. This is our education team. Very proud of our education department. You know, we've come a long way over the last 16 years. When I first started with VectorVest, our education focused primarily on the VectorVest program. You know, how to build searches, how to create portfolios, set up charts, and of course the VectorVest system of analyzing stocks and analyzing the market. That's pretty much all we did back then. We've evolved over the years. Now we teach folks how to trade options. We teach folks how to manage your retirement portfolio. And then myself and Steve Chappell, the gentleman to the left of me, you know, our job is to teach folks how to manage their swing trading portfolio and teach techniques that you would apply in your swing trading portfolio. Okay, so again, very proud of our education team. We've come a long way over the years. I also have Ray Clark. Ray is two gentlemen from me to the left. He is the Vice President of Educational Services, and he will be in the background answering any questions that you guys have along the way. You know, I have a lot of content to cover here, so I'm going to try to answer some questions as we go, but if you have a question, just feel free to ask Ray, and he will be here in the background. I apologize. My 16-month-old is trying to go to sleep. I can hear him crying. I hope you guys don't hear him. I hope it's not too distracting, but he's in the background trying to go to sleep. So we'll bear with it. So a couple of things I want you guys to get for me first. Number one, pen, a piece of paper, something to drink. I will ask for your participation in a little bit. If somebody can just grab a pen and a piece of paper, that'd be fantastic, because I will ask you folks to write a few things down for me later. Okay. Number two, get rid of any distractions. Speaking of distractions, we'll try to do our best here to get through, because you all here are ready to learn. All right. I really commend you for that. It's 6 p.m. here on the East Coast. A lot of your days are winding down, but you guys are here. You're looking to better yourselves as traders. So here's what you're going to learn today. I'm going to go through 5 common principles professional traders follow. I'm going to teach you an extremely easy and effective short-term trading strategy, and I really emphasize short-term. And then finally, how to quickly and easily identify the best trades. So what I'm going to take you guys through today is something that is suitable for your swing trading portfolio. This is not a retirement-minded webinar. This is more for the swing trader. Again, this is I'll teach you guys a very short-term trading technique. Again, suitable for your swing trading portfolio. I think this will help as well. If you guys stick with me to the end, I will share with you a copy of today's slides. Just somebody remind me at the end. I sometimes forget. Again, I have a lot of content to cover, so we're going to be together for about an hour. So maybe 6:50, 50 minutes from now, 45 minutes from now, say, hey, Jerry, don't forget the slides, and I'll put them in the handout section of your GoToMeeting control panel. Okay, just somebody remind me at the end. Okay, now we're going to start off by talking about what makes a professional trader a professional trader. So what are the qualities that separates these men and women from the average retail investor? And this segment here is all about getting you in the right mindset, because this isn't I mentioned earlier, this is not your buy and hold retirement approach. Okay, this is for the money that you have set aside to trade a little bit more actively. We hope you're doing that. We feel every investor should do that. Become a well-rounded investor. Have a retirement portfolio that you're managing. Learn how to trade options. Maybe you're managing a dividend portfolio where it's just income generation is the goal. And then you have money set aside to trade a little bit more actively. And I'm not going to tell you exactly how much you should be allocating towards each of these. You got to figure that out for yourself depending on your own personal circumstances. But this is for that portfolio here, and I think this is an important segment because there's a reason why professional traders are professionals, right? There's a reason why they've gotten to the top of their fields. And first is that they are realistic. When they first started out, they knew that there was just no magic pill that they were going to take to make them better traders overnight. Success in this industry, I think really in any industry, whether it's finance, construction, sports, the best in their respective fields, they've gotten there because they put in the time, they put in the effort, they realized it wasn't going to happen overnight, and they put in the hard work. So that's number one. Number two is they control their emotions. Professional traders control their emotions a little bit better than others. They don't allow losing trades to affect them. I know this is easier said than done, right? We don't want to be this guy. We don't want to be the one punching through our screen because maybe we've had a cluster of losing trades in a row, a couple of losing trades in a row. We don't want to get overly emotional when that happens. But professional traders, they focus on doing the right things and making the right trades. They know if they continue to do that, the money will follow. And one of the reasons they feel this way is because they place trades based on facts and data rather than gut feelings. And we've all been there. I've been, like I said, I've been with VectorVest now 16 years. And when I first started, I knew nothing about the stock market. So I would just kind of play around a little bit and buy some stocks because I had a feeling that they were going to go up, right? And this is before really learning the VectorVest system. Now, pros don't think that way. They don't have feelings. I make that funny joke, but they, of course, have feelings. But when it comes to trading, they don't trade based on anything else but facts and data. They look at the information that's in front of them, solely at the information that's in front of them to make their decisions. Next is they're prepared. They know exactly when they're going to get out of a trade, even before getting in. I love this slide too, because the first thing you do when you get on an airplane, I haven't gotten on an airplane in a long time, but the first thing that you do and the first thing the flight attendant does is they go through how to get off of the plane in case of an emergency, right? Before the plane basically even taxis out of the gate. And that's what professional traders do. They know when they're going to get out even before getting in, okay? Because they've examined and tested so many different variables and so many different techniques that they've figured out which one is the best. Lastly, I think this is the most important one here, is professional traders are disciplined. They stay sharp and focused when things are going well, but they stay resilient when things aren't going so well. So they have a plan and they stick to it. I'm going to pose a question to you guys. I told you guys I liked a little bit of participation today. What's been the most difficult part of trading for you over the years? Now, trading, not investing. I'm talking about swing trading and using technical indicators to help pinpoint entries and exits. What's been the most difficult part of trading for you over the years? I'll give you guys a few seconds to answer. There we go. Andrew says, sticking to the plan through the trade. Okay. Liz says selling losses, selling losers. Tom says exiting when things aren't working, when to sell, getting out of bad trades, following a plan, staying disciplined. A lot of this, this is kind of the overwhelming answers I get. Gary, that's a good one. Finding a good strategy and tools. Tom says picking direction. Usually when I do this webinar, the overwhelming response is when to exit the trade, right? When to sell. A lot of you guys are saying, really good answers. Staying disciplined, overcoming greed, choosing the right trade. These are all great answers. Now, think about those things that you've found most difficult. What happens if you continue to struggle with some of these things? Yeah, Harry says how to set stop losses, when to sell. Exactly. Mark says when to sell. What happens if you continue to struggle with some of these things? Well, you're going to go broke. Now, I don't mean you're going to be um, unemployed, living on the streets, right? You're not going to be playing this game, though, too much longer because losses are just going to keep building up and building up. You're going to wind up with no more money in your trading account. We don't want that to happen. If you start doing things the right way and correcting some of these mistakes, right, you'll know exactly what you're doing. No matter the situation, no matter what the market throws at you, you'll know exactly what you're doing. Think about the confidence that you'll have, okay? Never having to worry about when do I get out of a trade, or when do I get in. I think I've recognized a good setup, but when exactly do I get in? Or when do I get out? When do I take gains? All of that stuff needs to be figured out before you actually take the trade. Once you start to develop better habits, you'll start to see more consistent gains. Now, there is a big mistake traders make when first starting to implement short-term trading systems. They follow unproven, complicated strategies. They feel like they need to use 5 different technical analysis indicators and 3 different types of moving averages to help identify entries and exits. For some reason, we used to go to trade shows all the time, right? Money shows, you guys remember those, where we'd set up a booth, we'd talk to folks, all day long. Those were a lot of fun. But I remember speaking to folks years ago, and they used to bring me these sheets filled with charts, charts and just indicators and 5 different indicators. And, some say I use stochastics, MACD, average true range, Bollinger Bands, and 3 different types of moving averages. And I would say, whoa, you don't need that many indicators. New traders who are just starting to trade this way, they find value in complexity. They think that they're getting better signals or more reliable signals when they use different indicators. It's actually the opposite. The more indicators you have on your chart, the more confusion and frustration that will lead to. Because a lot of indicators are redundant. Stochastics and RSI, very similar indicators. They both have trending characteristics, but they also identify overbought and oversold price situations as well. So you don't want to throw 2 or 3 indicators that are going to tell you the same things. You also don't want to put indicators on the chart that might conflict each other. One's giving you a buy signal, the other maybe isn't. So it's just a matter of identifying the right combination of indicators for a complete trading system. And that's what I'm going to show you guys here today. I'm going to teach you a trading system called the RSI-2. It was developed by Larry Connors. I didn't create this system. Larry Connors did. You may have heard of him. He is an author. He's a trader. He has over 30 years in the financial markets industry. This strategy focuses on stocks in long-term uptrends, but are experiencing short-term corrections. I know that's ambiguous if you just look at it that way, but he clearly defines both of those situations. All right, so let's just kind of 30,000 foot view first. We're going to focus on stocks, or this system focuses on stocks in long-term uptrends, but are experiencing short-term corrections. What I love about this technique is that it is so simple. It only uses 3 indicators. A 200-day simple moving average to identify the long-term trend, and let me make sure you guys can see my arrow the whole time, and a 5-day simple moving average and the 2-period RSI for the short-term trend. So I remember I said that, that these are the types of stocks we want to focus on. Here's how he defines both of those situations. The 200-day simple moving average identifies the long-term stock trend, but the 5-day simple moving average and the 2-period RSI are applied for identification of the short-term correction. All right, so here's a chart of Procter & Gamble, and I went back. We're looking at November of 2018 to November of 2019. Don't worry about why I went back so far. I'll explain why I went back this far in a moment. But let's just take a look at the chart. This is the type of price behavior that we want to look for and that we want to favor. Price goes from bottom left to upper right. During this whole 1-year period here, the price stayed above the 200-day moving average, right? So the stock was in a long-term uptrend. But from time to time, and this is going to happen, right? Stocks pull back. The stock's price during these situations here stayed above the 200-day moving average, but fell below the 5-day simple moving average. That's the white line running through price. So long-term uptrend, short-term correction, very clearly defined. Price above the 200-day moving average, plain and simple, very straightforward, long-term uptrend. Falling below the 5-day moving average, that identifies a short-term correction. Now there is another layer here, right? It's called the RSI2 trading system. So we're going to add in here the RSI indicator. I've added it to the bottom of the chart. Relative strength index is scaled between 0 and 100. Now the industry standard look back period for RSI is 14-day RSI. By the way, we're looking at daily price charts here. This is a daily price chart. It's not a weekly chart. It's not an intraday chart. These are daily price bars. So we're looking at a 14-day RSI. That is the industry standard. And with the industry standard look back of 14 days, the lower extreme level is at 30, the upper extreme level is at 70. So oversold below 30, overbought above 70. Notice what I had to do is I had to pull our chart out even further to show you guys that the only time that the industry standard, again, 14-period RSI fell below 30 was back in October of 2018. Remember, we were looking at November of 2018 to November of 2019 in the slide prior. Not once during that time period did the 14-period RSI dip below 30. So it did at the end of, the beginning of October. Good buying opportunity there just using that indicator alone. But that's not what Larry Connors uses. He realized, he's like, listen, I'm trying to find a short-term technique. I want to be able to buy these little dips in within an underlying uptrend. Our 14-period RSI is not going to do it for me. So what he did was he sped up the indicator. He changed the look back period from a 14-day look back period to a 2-day look back period. What he also did was he lowered the extreme level from 30, dropped it down to 10. You might be asking, why did he do that? Why did he use a 2-period RSI at the value of 10? Why is he using a 200-day moving average and not a 150-day moving average? Why is he using a 5-day simple moving average and not an EMA? The answer to that, not knowing him personally, but I can speculate, is because it worked the best, right? Why would he publish a system like this without going through the rigors and testing it long term, using different variations of everything that we see here? I'm sure he tried a 4-period RSI. I'm sure he tried a 150 moving average, maybe an 8-day EMA. I'm sure he tried all these different combinations. This is what worked the best. So the question that you may be wondering is, why is he using these indicators? The only answer I have for you, and again, it's speculation, but it worked the best. Okay? So here is your setup. Here is your trading technique. It only uses 3 indicators. So how are we going to identify a setup? Very simple. Along with the price of the stock above the 200-day moving average, and you can see during this time period, price was above the 200-day moving average the entire time. Price above the 200-day moving average, but below the 5-day moving average, and the 2-period RSI dipping below 10. That is your trade setup. Okay? We're going to look at a lot of charts, a lot of examples here, close-up examples in a moment. But let's kind of take a look at what this trading plan looks like written down. We're going to go left brain, right brain here, right? Those of you like to learn, reading and looking at words and writing things down and having it laid out on paper, great. For those of you that like to visually look at the charts and kind of look at the examples, we're going to do that as well. So here are the entry rules. We are going to buy only when the stock is above the 200-day moving average and below the 5-day simple moving average with the 2-period RSI below 10. All 3 of those have to be true. And we are going to enter the trade near the close of that day. Okay? Not at 9:45 in the morning, not at 10 o'clock, not at noon. When I trade this system, I'm entering positions at about 3:50 to 3:55 p.m. Eastern time. I'm putting a market order in. I'm not messing around with limit orders because there's a chance You might not get filled, and I want to get filled before the close of the session. Okay? The exit criteria is we exit when price goes above the 5-day simple moving average, and we are going to exit near the close of that day whenever that happens. So we are entering when price goes below the 5-day simple moving average, and we are going to enter near the close of that day, and we are going to exit when price goes above the 5-day moving average, and we are going to exit near the close of that day. So we are entering positions and exiting positions near the close of a given session. Okay? All right, let's take a look at some examples. I've zoomed in here to July 16th to basically the beginning of August of 2019. Notice when I do that, I lose the 200-day moving average. Not to say that price is not above it, it's still above it. We know it's above it, right, from the chart that we just looked at. But when you zoom in here so close, we lose that. We lose it because price is so far above it that we just can't see that 200-day moving average. Okay? But just know in every example that I'm about to show you here, price is above the 200-day moving average. So on July 23rd of 2019, again, don't worry about why I went back so far. I'll explain why in a moment. But July 23rd of 2019, we have an RSI 2 setup. Price is above the 200-day moving average, but it has fallen below the 5-day moving average, and the 2-period RSI dipped below 10. How do I know that the price of the stock closed below the 5-day moving average? How do I know it didn't close above the 5-day? Well, this is a filled candle, a solid candle, and that means I know that price closed at the bottom of the body and opened at the top of the body. It's a filled candle. If it's an unfilled candle, like some of these that we'll see here, that means that price opened at the bottom of the body and it closed at the top of the body. Okay, so I know that on July 23rd of 2019, price closed below the 5-day moving average and the 2-period RSI below 10. So we're going to try to enter the trade as close to the close as possible. Now, I don't know what the price of Procter & Gamble was on July 23rd of 2019 at 3:55 p.m. Eastern Time. I don't have that data. So for the purposes of the demonstration I'm going to show you here, we're going to just use the closing price. All right, it's the best we're going to get with this example, or with these examples. We're going to use the closing price. So let's say we get in really close to the close on that day at 113.85. All right, we're in the trade. We get in, again, 3:55 p.m. Eastern Time. We're in the trade. When do we exit? We exit 1, 2, 3 days later, because we see that on July 26th of 2019, the price of the stock is about to close above the 5-day moving average. So we are going to exit the trade. The stock price on that day actually opened below the 5-day moving average, didn't it? It opened at the bottom of the body, crossed above the 5-day moving average during the day. We don't exit just because price is crossing above the 5-day moving average during the day. We wait for the end of the session and we exit the trade when we see price about to close above the 5-day moving average. Now, if we buy it at 113.85, we sell it at 114.73, that's a winning trade, right? Don't worry about how much money we're making just yet. I want you to focus on winning percentage. I want you to focus on efficacy. What are the chances of me making money using this system? Okay? Earlier, I asked you guys to take out a pen and a piece of paper. Somebody do that for me now, because I want you to create 2 columns. Create a win column and a loss column. And right now, put a tally mark in the win column, right? Because that's a winning trade. We buy it at 113.85, we sell it at 114.73, we win. The very next day, there is another RSI 2 setup, isn't there? Right? The rules are still true. Price is still above the 200-day moving average, but it's still below the 5-day moving average, and the 2-period RSI is still below 10. So I'm not saying that you should buy more of the stock the next day if it continues to fall. You can. That's a little caveat to what Larry Connors has put together. He says, if the stock price continues to fall, you can buy more shares of the stock. That's up to you. What I'm explaining here is, look, if you didn't buy it the day before, I don't know, let's say you didn't have enough buying power left, or you were on vacation, you were sick, you weren't watching the market, whatever the case may be, you didn't buy Procter & Gamble on July 23rd, 2019. But you woke up the next day, whatever, you had buying power left, you were feeling better, you come back from vacation, you're ready to trade again, and you see that Procter & Gamble is showing another RSI2 setup. So on that day, if you didn't buy it the day before, you buy it on the 24th of July of 2019 at 113.15. Now we sell it at 114.73. That's another winning trade. So put another tally mark in the W column. Okay, very, very simple. This is very, very simple system. I'm not cherry picking dates here. I'm literally moving the chart from left to right. So the very next setup was on August 5th of 2019. So price of the stock is still above the 200-day moving average. It's still in a long-term uptrend, but it's experiencing a short-term correction. Price has fallen below the 5-day moving average, and the 2-period RSI dipped below 10. Why didn't we have a setup the day before? Right? Price did close below the 5-day moving average, but the 2-period RSI did not dip below 10 on that day. Okay? So we identify that setup near the close of the session. We buy it at roughly 113.08. We sell it 2 days later at 115.52. That's another winning trade. Put another tally mark in the win column. In this case, the same situation. Price opened below the 5-day moving average, crossed above it during the day, actually hit a high, hit a price higher than where it closed at. But we wait for the close and we exit the trade when we see price about to close above the 5-day moving average. You put a market order in to exit at about 3:55 p.m. Eastern time. You're out of the trade. That's another win. We had to wait another month. So what was that? That was August 5th of 2019. The next setup, the very next setup, was on September 10th of 2019. Price of the stock is still above the 200-day moving average, but it's pulling back. It's experiencing a short-term correction. It has fallen below the 5-day moving average. It's about to close below it, and the 2-period RSI below 10. We buy at roughly 119.88, and we sell for a really nice quick 2-day gain at 122.77. The average holding period, by the way, is anywhere between 2 to 5 days. And let me get to the next one, and I'll explain something else in a minute. Really simple. I can't, express strongly enough how easy this system is. On October 2nd of 2019, so that was almost another month, about 3 weeks later, another setup. Look, you're not going to be trading the same stock multiple times throughout the week. Very unlikely. Okay, sometimes you might have to wait a month or so for another setup, but these are high probability setups here. On October 2nd of 2019, price of the stock excuse me, still above the 200-day moving average, but it has fallen below the 5-day simple moving average and the 2-period RSI below 10. Very important indicator. That adds such an important layer to this system. That confirms the short-term correction that we are looking to trade off of. We buy at roughly 121.08. Here we sell a couple of days later. Really nice gain, 124 bucks. The stock price opened below the 5-day, crossed above the 5-day during the day. Nice strong close too, closing near the high. And we sell at about $124. That's another win. Put another win in another tally mark in the win column. So far, so good. We're moving along here in the summer of 2019, and we haven't lost yet. All right, I think it's been 5 consecutive trades or 4. But here on October 14th of 2019, we got another setup. Price is below the 5-day moving average. You can see it was below the 5-day moving average here, close below it here, close below it here. Why didn't we have setups though on those days? Because the 2-period RSI did not confirm it, did not confirm the short-term correction. Here on October 14th, it did. So here, if we buy at 120.05, when do we sell? Let me see. 1, 2, 3, 4. We sell 5 days later at 119.08. You're looking at that and saying, well, that's a losing trade. Yes, it is a losing trade. That's why I said earlier that it's an exit criteria. It's not a stop loss. And I'm like, sometimes we don't have the camera on, and I always do this. I always do the air quotes when I'm doing this. Now I can actually show you. It's not a stop loss as you would understand it. It is an exit criteria. Now you might be asking, well, what about stop losses? What do we do if the stock price keeps falling? And if you're going to follow the system the way Larry Connors has put it together, he developed it not using stop losses because he felt through his long-term research and analysis that stop losses, cutting your losses at a certain level, hurt performance over time, as opposed to just simply using the 5-day moving average to exit the trade. Most of the time, and up until now, we've seen that result in a winning trade, right? Winning trades. Here it didn't. Here it didn't result in a winning trade, actually resulted in a losing trade. All right, so put a tally mark in the loss column. Now the very next day, again, if you didn't buy it the day before, you had an opportunity to buy it on October 15th. And if you bought it near the close of that day, you bought it at 117.20, you sell it the same day at 119.08. Now that's a winning setup. Okay, a winning setup. So that's actually how I want to put it. I'm showing you setups. I know I'm showing you trades too. I'm kind of referring to them as trades, but they're setups. The reason why I want to refer to them as setups is because you don't know which setup you're going to take, right? Again, if you didn't buy it the day before because of all of the other reasons that I laid out earlier, maybe you were fully vested, right? You didn't have any buying power left. So I'm showing you setups to illustrate no matter which setup you take, what are your chances of a winning trade? So here, put a tally mark in the win column because this winded up being a winning trade, and so did this one. If we would have bought it on October 17th, we would have bought it near roughly 116.63. We sell it a couple of days later at 119.08. That's another winning trade. Put another tally mark in the win column. So who was keeping track? I'm going to give you guys a little putting you out there, calling you out. Who was keeping track? How many wins and how many losses did I show you there? I'll give you a hint. I showed you 8 setups. 8 setups. How many wins and how many losses? Now that's easy. There we go. Ronald says 7-1. Right, because the only loss was just a few days prior to this one that we're on now. 7 wins, 1 loss in 8 consecutive RSI2 setups, basically from July of 19 to October of 19. All right, that's only a three-month window. I knew that wasn't going to be enough. And I told you earlier that I would explain why I went all the way back to 2019. Because I wanted to teach you the system, right? You know, we use historical examples when we teach techniques. That's fine. Using historical examples are fine. What I did, though, to kind of drive the efficacy home and the high probability system that we have here is I went all the way back to November of 2018 and I did the same research and analysis that I just went through there with you guys. I did that from November of 2018 all the way to current, about a couple of days ago. And that's a 4-year period, isn't it? Right, man. November of 2018 all the way to current, that's a 4-year, 3-month period. Over the last 4 years and change, there were 50 RSI2 setups. Let's review. What's an RSI2 setup? An RSI2 setup is when you have price above the 200-day moving average, but fallen below the 5-day moving average and the 2-period RSI below 10. That is an RSI2 setup, and there were 50 of them from November of 2018 to current. There were 43 winning trades and only 7 losing trades. That's an 86% winning trade percentage. So going back to why I showed you setups and referred to them as setups is because on any given one of those 50 RSI2 setups over the last 4 years, you had an 86% chance of making money on any given one of those RSI2 setups. That's pretty good. Look, 86% winning trades, 1 stock, 4 years, I'll take it. Okay, but that's just 1 stock. What I did was, as of just a couple of days ago, you could see as of February 21st, 2022, I went into the S&P 500 no petro, no oil watch list. We have a watch list within the VectorVest programs called S&P 500 no petro. It's just the S&P 500 no oil stocks. And I sorted that list of stocks by comfort index. Comfort index is a VectorVest proprietary indicator that looks at a stock's ability to resist long or lengthy pullbacks, lengthy downturns. A high CI stock, it's on a 0 to 2 scale. Above 1 is good, below 1 is bad. The higher above 1, the closer to 2, the better. A high CI stock, 1.5, 1.6, 1.7 and higher, 1.5, 1.6, 1.7. Those are the types of stocks, watch my cursor, that do this. Bottom left to upper right, bottom left to upper right. They exhibit price growth persistence over time. Procter & Gamble, remember the 1 year chart we were looking at in 2019, bottom left to upper right, stays above the 200-day moving average the entire time. Those are the types of stocks we want to favor with this technique. I don't want junk stocks. I don't want penny stocks. I don't mind lower dollar stocks, but the system has to be in place, meaning it really doesn't matter what stock you pick. As long as the price of the stock is above the 200-day moving average, but below the 5-day moving average and the 2-period RSI below 10, it's technically an RSI2 setup. But kind of layering in and adding in the VectorVest analysis and the VectorVest forced ranking of stocks allows us to bring to the top of the list, any list, the stocks that we want to favor, and those are the high CI stocks. Okay, so this right here, guys, is not a cherry picking exercise. What I showed you with Procter & Gamble is it's a one stock. I taught you the technique, very simple, laid out all the rules on one stock. This is not a cherry picking exercise. This is an exercise in force ranking stocks to bring to the top of the list the stocks that you want to favor. Those top five, and I'm also taking the top 5. So that's another exercise in rank analysis. Is you take the top, you sort a list in a very particular way, and you literally take the stocks from the top of the list. Okay. Here are the top 5 CI stocks in the S&P 500 no petro over the as of February 21st of 2022. Over the last 1 year, there were 94 RSI2 setups across all 5 stocks. 94, not 94 each stock, 94 across all 5. 72 winning trades, 22 losing trades for a 77% winning trade percentage. And this is where I've done this webinar dozens of times. And every time I do this, I always update this research here. I'm always looking at the top 5 CI stocks on any given week that I do this webinar. I always land between 75% to 85% winning trades. Always. So 77% winning trades, 94 trades, 5 stocks, the top 5 CI stocks in the S&P 500, no oil. Fantastic results. Let's put some performance. Let's put some dollar performance in the mix here. So I told you earlier I wanted you to focus on efficacy, winning percentage. What's my winning percentage? What's my likely winning percentage on any given trade that I take? Procter & Gamble, you saw, was 86%. The top 5 CI stocks on the S&P 500 no petro was right around 77% winning trade percentage. I mean, if you're not happy with 77% winning trades, I don't know what I can do for you, right? So, money managers would give up so much to have 77% winning trades, more than 50% winning trades. They'd be thrilled with. What you're looking at here is a long-term portfolio that centers around the same RSI2 stock selection system that I just taught you. What is that? This portfolio bought stocks from the S&P 500, high CI stocks from the S&P 500 that had an RSI2 setup. Price above the 200-day moving average, but below the 5-day moving average, and the 2-period RSI below 10. Throughout this whole 12-year test, This system bought stocks based on that stock selection system. The exit criteria that is used here in this portfolio, it's a little different. And the only reason why it's different is because we don't have a way within the VectorVest program to automate closing a position when price goes above the 5-day moving average. We don't have a way to automate it. I wish we did. I hope we do soon. We just don't at the moment. So I wanted to create an automated system. When we teach you techniques, we teach you the manual process, right? The cherry picking process, kind of what I went through earlier. We also want to leave you guys with or give you an automated way to trade it. Okay, now then this is almost with every technique that we teach. We try to come up with an automated system to trade it, and this is what we came up with. Again, the exit criteria a little different. This back test from February of 2010 to just a few days ago, so that's 12 years, up 662%, 55% a year, with 93% winning trades. 93% winning trades, 226 winning trades, 17 losing trades over the last 12 years. It's not a typo. Those are real numbers, guys. Those are real numbers. 93% winning trades. Now the drawdown was right around 25%. Notice where we are now. Okay, just a little bit off of the all-time performance high. Okay. Now the 25% was 2020, the COVID crash. This portfolio, by the way, doesn't use market timing. Okay, you might be asking, why doesn't it use market timing? Why shouldn't I use the confirm calls? I'm going to answer it the same way I answered the Larry Connors kind of hypothetical. Why did he use the 200-day moving average? Because this worked the best. I tried using the confirm calls in the primary wave of the DEW, the green light, and I tried to use different market timing signals. Folks, this worked out the best. Those other variations didn't work out as well. So during the COVID crash, we didn't touch the portfolio because the trading system told us not to. We followed it the way it's supposed to be followed. And as you can see, we weathered that storm and we continue to make higher highs and higher lows in terms of the portfolio value, and we're just off of the all-time recent high currently. Okay. Now the VectorVest composite. What did the overall market do? That's always the barometer, right? Did we outperform the market? If we didn't, then what are we really doing? The VectorVest composite during the same time period went up 174%. So it actually almost tripled in value. The market, the VVC, almost tripled in value. Well, we outperformed the market by quite a bit. 662 total gain, and the market only went up 174%. Okay, David says, were these the same stocks over that time period, or did you change up the stocks? The stocks are continually changing. Stocks are always continuing to change. We sell out of a stock, we buy a new one. We hold that one until the exit criteria is met. We exit it, we buy a new one. And it's not the same one, it's just the different stocks all the time. And I'll explain the stock selection system and how the stocks are found in a moment. That's going to be important. Okay? Now, you're probably wondering, okay, this is fantastic. 93% winning trades. Marcus is asking, how would commissions impact that? It wouldn't, because you choose the right broker, you don't pay commissions, right? That's the beauty of trading these days, is you got a number of different broker houses that don't charge commission. So commission's not playing a factor. You're probably thinking, this is fantastic. I've never seen 93% winning trades before. Never. And we never did either. When I brought this to Ray Clark and Steve Chappell, Dr. DeLito, we sat down and we said, whoa, 93% winning trades, that's got to be wrong. And we looked at the trade history and we saw it. 17 losers, 226 winners. We kind of dissected it, and this is what we came up with. And you're probably wondering, well, do I have time? I don't have time to look at all these charts. I'm saying you have to close and open positions by the, near the close of every trading session. You're probably thinking you don't have the time to do that. What I'm about to tell you eliminates all of that time, because no matter what we teach you, we want you to be able to do it faster, smarter, and better. Okay? A lot of you guys are saying, I'm seeing it, a lot of the comments are coming in, this is great, this is fantastic. I've been kind of looking for this kind of short-term trading approach. Earlier, what were you guys saying? You were saying, I have trouble exiting positions, I have trouble finding trades, I have trouble sticking to a plan, finding a system that I like. This is a fantastic short-term trading system that will take your swing trading to the next level. Now, you have a couple of choices. You can do things the fast way or the slow way. The slow way is to kind of take bits and pieces of what I taught you guys here today and apply it. Or we can just give you the answers. And that's kind of the approach that we're going to take here. I want to talk to you. That's why we put together this 6-session webcast series where we teach you techniques from 3 of the very best professional traders in the industry. You'll learn top trading strategies of the pros, similar to the one I taught you here today. And you'll also learn how to quickly and easily identify the best trades. I hope you saw that if you learn to implement techniques like the one I taught you today, you'll get there. You'll achieve that short-term trading success that you're looking for. So let's go over the modules. All right, I'll talk about more of the course and what's all included in a moment. But let's talk about the modules because the modules are located in the VectorVest University. There are 6 modules. They're all pre-recorded. Okay. The first module, we get you in the correct mindset. We talk more about how the pros think. We talk about risk management. We talk about order entry. We lay out that foundation first because that's really important that you have the correct mindset going in. Because again, this is not, I'm sure you saw this already by just the RSI2 system, this is not your buy and hold retirement minded approach, right? So it's important to get into the correct mindset right out of the gate because then we start to teach you different trading techniques. Module 2, candlestick analysis, bullish and bearish candlestick reversal signals and how to trade them. Module number 3, we teach you the different types of market environments that you'll see. For example, markets can trend, right? That's a nice environment to be trading in. Sometimes the markets don't trend anymore, they channel, right? They move sideways. Those are a little bit more difficult. Then there's situations where the market hits an extremely oversold price situation. We teach you how to recognize those 3 environments and then which indicators to use in those situations. Module number 4, myself and Steve Chappell, by the way, are your instructors for this course. Steve teaches you a technique developed by Linda Ratchke called the Holy Grail. This is a short-term trading system for both bullish and bearish markets. Okay. Module number 5, I'll teach you 2 techniques developed by Charles Schaap. One called the 50-50, the other called 80 Excellence. RSI2, very, very short term, as you saw. So is the Holy Grail. The 50-50 I like because it's a little bit more intermediate term. You might hold on to stocks a little bit longer. So if you're not so much a short-term trader, the 50-50 and the 80 Excellence are going to be, for the more intermediate term trends. We finish things off with the RSI2 and another technique that Larry Connors developed called the RSI25. It's for ETFs. Earlier I did a webinar at noon today and a few people were saying, can you apply the RSI2 to ETFs? No, but he developed a system called the RSI25 for ETFs only. All right, it's a great system using the relative strength index. As a special bonus, now I'm going to start to get into some bonuses here and some things that you guys will get with the course. Special bonus, we're going to give you 1-year access free to our Master the Art of Candlestick Analysis. This is a 6-session self-study course. Everything you do is on your own. There are no live sessions with this candlestick course. And we touch on candlestick patterns in module 2 of Trade Like a Pro, right? Just one module, just a couple of different patterns. We get into it really in depth here with this course. We value and sell this course separately at $9.95. We're going to give you 1-year access to it free as part of the Trade Like a Pro course. As part of the Trade Like a Pro course, we will meet live 6 times. We're going to do 6 live mastery support sessions. I'll go over the dates in a moment. These sessions are great because they help you implement what you learned in the course, in the module. Okay, so we're going to go slow. In Mastery Session number 1, we're going to cover the contents of module number 1. Mastery session number 2, we're going to cover the contents of module 2 and so on. Okay? The content and the examples that we show in the modules are historical examples, and that's fine. What I love about these mastery sessions and what Steve and I do is we get into the program and we look at the current market on that day. Okay, we look at the market on that day and we say, okay, let's say module number 5 is the 50-50. In module number 5, I taught you about the 50-50 and the 80 excellence, right? And then in module number 5 mastery session, we're going to go through and we're going to look for 50-50 examples as of the current market on that day. So we get, we always get the I wouldn't say complaint, I hate using that word, but the concern of, you guys show us historical examples. I don't care what happened in the past. Show me what's happening now. All right, we do that in these mastery sessions. Okay. You're also going to get access to 70 days of the VectorVest Premium program. This is our real-time data for the U.S. market. If you don't already have it, if you already have Premium, you love it, right? If you have VectorVest end of day or the intraday data, we're going to give you 70 days access to the VectorVest Premium program, which includes Pro Trader and the Auto Timer. And those are important as we move forward here. This is a bonus session. This is essentially, I guess, mastery session number 7. It's a live trading session. I love this session because this is where we wrap everything up. We implement everything that we learned over the course of the 6 weeks, and we put it to practice in a live trading session. In this session, I go through everything from market analysis, trade setup, trade execution, and trade management. From A to Z, we go through everything. Okay? Now, here's for the good part. This is huge. Exclusively for workshop attendees, you will be given pre-built scans that make finding your trades a breeze. You're probably thinking, all right, great, they're going to teach us the RSI 2, they're going to teach us the 50-50 and the Holy Grail. How am I going to find my trades? The legwork has been done for you. I built these scans to quickly and easily identify the best trades. You can see this little image here. You're going to get a Trade Like a Pro folder. You're going to get all the scans that we use, and they're going to be inserted into your program so you don't have to build them. Okay, you don't have to build them yourselves. You're also going to get this trading system. This is the automated trading system where the auto timer is not required actually because it doesn't use market timing. But this automated trading system that centers around the RSI 2 technique that over the last 12 years produced 226 winning trades, 17 losing trades, 93% winning trades when the market only went up 174%. Now with an automated system, there's a lot of variables, right? There's how many stocks does the portfolio hold? There is, do I replace or not? What's my method of redeploying funds? Do I diversify between industry and sector? Do I use market timing? All of these little variables that really are included in an automated system, you're going to get them all, and they're all located in the VectorVest University, on the membership site, on the course outline. Excuse me. Okay. Most importantly, you get hands-on trades, hands-on training by both myself and Steve Chappell. Steve is the director of Trading Systems Development. We will be in the mastery sessions with you guys, answering questions. We give you guys homework assignments after each module. We'll go over the homework assignments in those mastery sessions as well. You can ask us questions about the modules during those mastery sessions. So you really get hands-on training by Steve and myself. Now this course is valued at $29.95. The early bird rate is still available. That's $24.95. But for you folks here today that have taken time out of your day to join me, I'm going to knock an extra couple of $100 off. So what I'm going to have Ray do, probably done that already. Yep, thanks Ray. He typed in the address that you guys see at the bottom there. It's www.vectorvest.com/TLP. Ray typed it in the chat box, so you can just click on it. Now, this $22.95 rate is going to be available for only a limited time. Now, I'm going to keep it open for a little bit longer because I am recording this session, and I want to make sure that those viewing the recordings, maybe some people didn't have a chance to join me live, either at noon today or now, and then they're going to watch the recording later tonight. I want to give those folks, and talking to you specifically, you folks that are watching the recording, the ability to register for the low rate of $22.95. Okay, now if you are an elite subscriber, your rate isn't $22.95, it's half off the regular rate, so it's $14.97.50, and that $14.97.50 rate is available all the time. Okay, but if you're not an elite subscriber, $22.95 is the best rate that we have. And just again, let me just kind of go through what that includes. It includes the 6 modules, the 6 live mastery support sessions, the Master the Art of Candlestick Analysis, the 1-year access to that self-study course, pre-built scans, the RSI2 trading system. Also, I'm sorry, I failed to mention this. We also have an RSI25 automated system as well that you will get. That the RSI25 is the ETF strategy that Larry Connors developed. I also developed an automated system to trade that as well. You'll get that RSI25 system as well. 70 days access to the VectorVest Premium program. What am I forgetting? And by the way, guys, this is 100% money back guaranteed. If you watch the modules, if you join us for the live mastery sessions, or if you just watch the mastery sessions recordings that are uploaded to the university, if you do all that, you do all the work, by the way, we know if you do or not. If you, at the end of the course, you say, you know what, I haven't learned anything, I want my money back, well, 100% money back guarantee. Now we take the trading system away and we take the searches away, but we give you the money back. So it is a 100% money back guarantee if you're not satisfied after the course is over. The live trading session is on April 27th at 8:30 a.m. Eastern Time. Okay, 8:30 a.m. Eastern Time. We start an hour before the market opens, and we go through, again, everything. We go through market analysis. What does that mean? That means, okay, what's my directional bias, right? You got to determine every single trading day whether you're bullish or bearish on the market or neutral. So we determine on that day, what's the market doing? Are we bullish? Are we bearish? Once we determine that, we go into the Unisearch scans that, again, will be inserted into your programs. We run the scans. We look at the charts. We set up watch list of potential trades. This is done an hour before the market opens because all this, you have to be prepared once the market opens to trade. With every setup that we put together, we know where our confirmation level is, where our initial stop loss level is for every trade. Now, once the market opens, we take a breather, we wait about 15 minutes to a half hour, we see if any stocks are confirming, and those are the stocks that we're going to trade. So everything from, again, market analysis to trade execution is what we do in these live trading sessions. Okay. All right, guys, I'm going to stick around for a few more minutes to answer some questions, but go to www.vectorvest.com/TLP or just click on the link that Ray put in the chat box. That'll get you to the registration form. As soon as you register, you will get an email shortly after with all the information that you need to access the course in the university. Directions on how to access the course, the dates of the live mastery sessions as well, all that will be in that confirmation welcome email after you register. Okay, yes, thank you guys. I put the slides in the handout section of the GoToMeeting control panel. So those of you joining me via GoToMeeting, you'll see it's your little control panel, right? Where you're typing in comments, questions. It says handouts. Handouts. It should say TLP webinar, right? That's a PDF that you can open, and that's the slides that I used here today. Okay. Yeah, Jim, I hope you're understanding, kind of grasping. Yeah, 243 trades. Yeah, small gains, right? We're not looking for home runs. This is not a home run hitting strategy. You're not going to be getting 20 to 40% gains at a clip. This is these are very, very short-term, quick gains, and they've compounded to that 55% annualized rate of return there. That's 640%. The high number of winning trades and the small amount of losing trades got us to that 650% return. Okay, yes, a lot of short-term gains, short, quick gains. That is correct. Okay. All right, let's see. Let's see. Yes, it is a U.S. course, so we will be solely in the VectorVest 7 U.S. program. Ron says, are the charts daily or some other intervals? We're going to be looking a lot of daily charts. We're not going to be doing any day trading in this course. Nor do we really look at weekly charts. Everything that we do pretty much is on daily price bars. All right, let's see. Dave, that's one of the things that is included in the trading system that you will get as part of the course. It's a handful of stocks. We're not trading 20 stocks at a time, so it's a small number of stocks that we trade. Mary says, has the RSI system been tested on the Canadian market? Off the top of my head, Mary Jane, I don't believe so. But the great thing about it is that you can do it. Once you have access to the searches and the auto timer, you can run the back test yourself in the Canadian market. We have Canada and UK and Australia. This Larry Connors all of these folks, Linda Radke, Charles Schaap, Larry Connors. I mean, they trade more than just stocks. They trade markets, globally. But they develop these systems for the U.S. market. So I don't know how well it translates to the other markets, but you do have that ability once you have the searches and the auto timer to run it, the test yourself for sure. Ron says, not familiar with the 2-period RSI. What are the period? It's a 2-day RSI. So it's just a relative strength index, the way you would normally apply it to a chart, but instead of a 14-day RSI, which is the industry standard, what Larry Connors did was he just lowered that to a 2-period RSI. It's a 2-day RSI. Very fast signal, right? Very fast indicator, because it matches nicely with the price falling below the 5-day moving average. Another reason why he went with the 2, it matches nicely, kind of gels nicely with that 5-period moving average. You're welcome. All right, guys, my email address is jerryd, Jerry, D as in David, at VectorVest.com. JerryD at VectorVest.com. Shoot me an email about, if you have any questions about anything that I went through here today. Once you register for the course, throughout the course, you'll have my email address. You'll have Stevie's email address. Shoot us an email after the course even. Your education doesn't stop with the course or when the course is over. I get emails all the time from former students who, say, hey, Jerry, I got this 50-50 technique. What do you think? They give me the stock. They go through what they're seeing, where they think the stop loss is, things like that, and I'll either confirm or just kind of correct them if they're a little off. But that goes without saying, guys, that you have us as resources after the course ends, not just during the course. Thank you, Ron. Appreciate that. All right, guys, enjoy the rest of your evening. I love this course. It's my favorite course to teach. Remember, we start in, March 16th is the first mastery session. That is, I believe, a Wednesday. Yep, at 2 p.m. Eastern time. You have plenty of time to go through these modules at your own leisure, of course. All right, guys, have a great weekend. Have a great rest of your week. It is only Wednesday. And we'll see everybody soon. Take care, everybody.